Wherever you're listening, unless you're driving, close your eyes for a second. And I'm going to say two words that might scare you more than anything else: mortgage, insurance. Most people hear mortgage and insurance, and that's scary enough. But then you put them together into mortgage insurance, and it's a truly terrifying concept. Today, I want to debunk some of those myths. Usually, it's actually built, the reason it's built into the rate is because the rate is just a calculation of risk to the lender. So having mortgage insurance then should usually impact your rate, correct?
Correct. Matter of fact, the two largest purchasers of mortgages in the country, Fannie Mae and Freddie Mac, government sponsored entities, actually provide a better price for loans that are insured because there's less risk to them as an institution.
And so that's why sometimes it can, here's the crazy part, embrace the fear. It can actually make sense to get mortgage insurance, correct?
It makes a lot of sense to get mortgage insurance, and not just because that's what I sell for a living. There's a lot to do when you're buying a home. And we talked earlier about why it was invented in the first place. But if you have to save up 20% to put down, and think about the market we've been in, 3 years ago, you were saving up for a 20% down payment on that $400,000 house. That's $80,000. May take you 5, 6, 7 years to come up with that $80,000. Well, if you had waited just 3 years, that same $400,000 house 3 years ago, maybe $500,000 today.
Mm-hmm.
And now it's $100,000 and you're even further away. Well, if you had used a mortgage insurance policy, purchased that house back then with the down payment you did have, you'd have realized that $100,000 gain in equity just over that short time and be hopefully living in a sustainable home of your dreams.